Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today. February 8th, 2024. And now let's first take a look at what the market is doing. Even the S&Ps just turned red. They're down $6.75. You can see they're about $5 off of their lows. They're also only $8 off of their highs. Relatively tight range on the E-mini S&Ps today. Nasdaq's had a little bit more of a range, just about 100 points. In the Nasdaq, it's up 34. Tale of two tapes here. You got the Nasdaq and the Russell both higher, and the Dow and the E-mini S&Ps both lower. Volatility for the first time turning a little bit green. I don't put too much weight in it, but I am keeping my eye on it as we sold off here on the E-mini S&Ps. Volatility crept up pretty quickly. You can see it traded down to 1450. It's trading at its highs at 1470 right now. All right, what am I going to take a look at? Well, usually I like to go and look at my list, my watch list, and get rid of earnings, and then look at high IV rank and the IVX percentage change. I like that to be green. Today, I'm going to be looking at a post-earnings trade in ENPH, which we all know if it's a post-earnings trade, volatility is going to have come down. So the IVX 5-day change is irrelevant to me in this instance. As a matter of fact, in ENPH, it's down around 24%, but the IV rank is still high at 31. Let's see how high that IV rank is relative to where it's been in ENPH after earnings. You'll notice here that after earnings, a lot of times the IV rank gets down into the teens or even lower. It's hanging out at 31% right now, relatively high in my eyes. We had a good trade. It was a little bit more directional trade yesterday on the podcast. On Tuesday on the podcast. And again, you can see all of these trades by going down to the follow page. You'll see all the participants there. There you got Jamal and my son Nick, and there's my trade for ENPH. You can filter by individual traders. If I just click on Bob the Trader, that's me. You'll see yesterday's trade in Baba, which worked out very, very nice. I put it on Tuesday, took it off on Thursday. And again, I'm not showing you this because it's a winning trade, because I've got an NVIDIA in here, which is a losing trade. It's a full loser on a broken wing butterfly. What I'm trying to show you here is that you can see all of the different adjustments that I've made in trades. When you go through this, you might want to see, hey, what have I done in Netflix these days? You can filter by going just Netflix, and then it'll pop up all of the trades. You'll see the openings, the closing, the rolling trades when I was in trouble in Netflix, and how I worked out of being down money in Netflix to being up money in Netflix ultimately. All right, well, let's get back to the trade at hand. ENPH, Enphase Energy. I haven't traded in a long time, but I'm going to go with our research. Let me explain to you what that research is. Usually when a stock gaps for earnings, it stays into a relatively tight range moving forward. Now that's going to do nicely if IV rank is high. If IV rank is low, it's going to make it much harder to put on a trade. So I'm going to use a little bit more buying power with that assumption that I think ENPH is going to stay inside a range. Now, if you don't think ENPH is going to stay inside a range, this is not the trade for you. So what am I looking to do here? I'm going to go to March, 36 days. We like to go to the options in the monthly cycle that's closest to 45 days. April is the next monthly option cycle, not the weeklies, monthly options that have 71 days. We like 45. I would not look to trade in ENPH in these 43-day options. You'll see the markets are significantly wider and the volume is going to be significantly less. The only thing you can control is entry. So you want to be in a month that has much tighter markets. You'll see here the markets are 10 cents wide or less, where the options that we just looked at were more like 30 and 40 cents wide. So what am I looking to do? I'm going to do a classic strangle here. Post earnings, which means the earnings have already come out, so we don't have to worry about that. Good monthly implied volatility of 58%. Good IV rank of 31. Good tight markets with a lot of liquidity, especially after earnings. So I'm going to go to the 105 puts, which is around the 25 delta. I usually like to go down to the 15, 16, 17, 18 delta options, which would bring me to the 100. And I would, if I was doing an equal size on both sides, I might go to the 140s. But I'm going to look to collect a little bit more premium on here. Let's see, 140, 100. If I do the 100, 105, that's all the way up at $5.03. Yeah, I'm going to look at doing something that's a little bit, well, skews it a little bit to the upside. Now, you certainly can stay down on the 100, 140, which is a lot more classic Iron Condor, basically delta neutral. I guess I'm skewing this ever so slightly to the upside by doing the 105, 140. I would quickly, people always ask, when would you take off this long delta or adjust this long delta? Well, if this long delta goes from 8, where it is now, to 15, 15 is kind of my low end, 15 to 25. I really do seem to act when it's closer to 15 to 20 deltas. I would roll down these 140 calls if I was getting more long delta to the 135s or the 130s whenever that happens, and I would leave my 105 puts right where they are. I got filled at $4.93. I got filled when the stock was unchanged to trading around 17 cents. Well, I'll look at it in a minute on the follow page. 105, 140, I'm using $1,000, $1,100 in buying power, and I collected $4.93. You can probably collect $5.67 now in this better than I am. You can see with the long delta, as the stock goes a little bit lower, obviously the Strangle is going to go a little bit higher. If volatility contracts, that'll offset that ever so slightly. But if you're watching this and the stock is down around $1.30, $1.40, know that you can get filled around 505 or so. When I put this trade on, the stock, like I said, was only down around 17 cents. $16 a day in theta decay, 9 long deltas presently on this position. Max loss, obviously, the stock can go to 0 on this trade. What's the expected move over the next 36 days or so? $14, which brings us just under 105, would be where this dotted line is. And then, of course, to the upside, you've got that 140-ish strike there. So I'm looking to sell the 105, 140, which I already did, for $4.93. Maybe it's trading a little bit higher for you. Let's take a look at the follow page if you want to, so you can see that. Using $1,000 in buying power, I'm just going to reset this and click off of my name for a quick second. Using $1,000 in buying power, I don't think I have to show you how to reduce your buying power, but you know how to do that by buying the wings. Here's the trade I made. When I placed the trade, the stock was closer to 118. The stock is 116 right now. When I sold it, it was $4.93 with a 68% pop. Open this up here. It'll say post-earning Strangle in high IVR stock. If I make any adjustments to this trade, they'll be right here on this page for you to see. Let's take a quick look, since we have these numbers right now, if my pop has changed with the stock going down $2 from where I originally placed the trade. Let's go on the trade page, and you'll see here that the pop is actually 75%. It's actually gone up ever so slightly. All right, ladies and gentlemen, you know what that means next. I'm going to ask you to move, bring, transfer your account to Tasty Trade. Help us keep the lights on here. Take advantage of some of the great promotional things that Tasty has to offer you, not only our customer service and our accountability. You can always reach Tom at tastytrade.com. Tom at tastylive.com. You can always reach me at B-A-T, at tastylive.com. Please like and subscribe to my YouTube channel so that they'll keep me around for a couple more years. Help me keep the lights on here by bringing your account to Tasty Trade, the #1 brokerage firm in the galaxy.